Hello friends. We have lately been getting a lot of queries around margin trading facility, also known as MTF. I've been giving a lot of replies on our social media handles. The team has also been connecting with a lot of customers, but we thought that let's make a video to make it easy for all our clients to understand. But first, let us understand what is MTF. So MTF first of all is known by various names. It is known by margin trading facility, it is known as margin finance, it is known as pay later, and some also call it buy now, pay later. MTF was not allowed in the stock markets. The original circular came back somewhere into 2016 and 17. From that point of view, a lot of brokers started allowing MTF as a facility to all their customers. But lately, a lot of other brokers, discount brokers, have also started giving MTF facility to all their customers. And a lot of customers now coming out with queries like how does it work? What are the features of MTF facility? So let's demystify what is MTF. So let me give you an example first. I'll give you two examples for you to just comprehend how MTF works. So say you have got 1 lakh rupees and you want to invest into a stock where you have a very high conviction. You've gone through the numbers, you think it is fundamentally very strong, you think in the short term the technicals are also good, and you have a very strong confidence in that stock that it will give you a reasonable amount of return. So as an example, let us take that this stock you believe will give you a 10% return in a period of 1 month. So what would have happened had you invested your original 1 lakh into a stock? This 1 lakh, had it grown as per your expectation by 10%, would have become 1,10,000 at the end of a month. So how much profit do you make? You make 10,000 rupees. 1 lakh growing to 1,10,000, you make 10,000 rupees of profit. However, if you take an MTF facility where you have to pay only part of the money, you can take a higher exposure. So with this 1 lakh, assuming you're buying the same stock which is available at a 33% margin, so you give 1 lakh rupees as margin, the broker funds the balance 2 lakhs and you buy 3 lakhs worth of stock. 1 lakh rupees of your margin, 2 lakh rupees broker funds, and you buy 3 lakh rupees of stock. And again, the stock moves up 10%. How much do you make? You make 10% on 3 lakh rupees, which is 30,000 rupees. So as against 10,000 rupees, where you would have put only your own money, here you make 30,000 rupees. However, there is a cost to it. Broker is funding 2 lakhs. Broker will take interest on that. So for easy understanding, let's take the rate of interest as 12%. 1% monthly. So a 1% charge on 2 lakh rupees for 1 month comes to 2,000 rupees. So technically what do you make? You make 2,000 rupees less from the 30,000 rupees profit. You make 28,000 rupees. So let's just compare. You make 10,000 rupees if you invest your own money, and you make 20,000 rupees if you invest through margin funding. But all this is just about the returns that you make. I have not spoken about the risk. Think of risk here. What if it doesn't go the way you expected it to go? The stock goes down 10%. Let's just compare these two things again. If you would have invested your own lakhs or own 1 lakh rupees, the stock would have come down by 10,000 rupees, a 10% fall, you would have lost 10,000 rupees. But in the second case, where you've taken a funding, a 10% fall on 3 lakh rupees means a 30,000 rupee loss. Added to that, broker will still take your 2,000 rupees as interest. So as against a loss of 10,000 rupees, here you lose 32,000 rupees. It's a lot. So margin funding doesn't just mean only making money. It doesn't mean high returns. It means high risk as well. So you have to be very clear. When you buy a stock, you should definitely have a very high conviction on this stock. Otherwise, it can cut both ways and you can have a lot of losses as well. So let's take another example. Let's take an example of you investing 1 lakh rupees for a period of 1 year. So in the first case, when you invest your 1 lakh rupees into the markets, you make a return of 20%, you make straight 20,000 rupees. What if you take a margin funding? You invest 1 lakh, broker gives you 2 lakhs, and you actually invest 3 lakhs rupees into the market. Again, market gives you a return of 20%, you make 60,000 rupees. Broker will again charge you interest on this 2 lakh rupees that he has funded at the rate of 12%. I am taking the same rate of interest. So he charges you 12% on 2 lakhs, which is 24,000 rupees. So 60,000 minus the interest 24, you make 36,000 rupees. So let's just compare the two. When you invest on your own, you make 20,000. When you take margin funding, you invest 36,000. Again, risk is there here as well. If the stock goes down 20%, in the first case, you will only lose your own capital. But here you will lose on the borrowed capital as well. So again, talking about risk, this is high risk and high return proposition. Before I take you through the features of MTF, let me just talk about risk once again. 3 things. Number 1, you have to invest in MTF only when you have a high conviction idea. If you do not have high conviction, you don't have to go for MTF. Buying in CNC is absolutely fine. The second is the rate of return that you are expecting on the MTF investment that you've done has to be higher than the rate of interest that you are paying in taking MTF. I gave you an example earlier. I'm just reiterating, the rate of interest has to be less than the expectation of rate of return that you are expecting on the MTF investment. Number 3, you have to always make sure that the maintenance margin is in place. That means in the previous example, you have given your 1 lakh rupees, which is 1/3 of the total investment of 3 lakhs. If this 1/3 falls, this 1 lakh, because of market movement, falls to 90,000 rupees, there is a loss of 10,000 rupees. The broker will always have a prerogative to square off your MTF positions if the maintenance margin is not there. So you have to maintain a little bit of buffer in your account, 10, 15, 20,000 rupees at all points of time, so that if market in the interim falls a little bit, your margin is always there in a place. Number 4, you do not have to forget to pledge your stocks. Whenever you buy a stock under MTF, it needs to be pledged. So next day, you will get a message from the broker through the NSDL portal. It will come on your SMS, it will come on your email. You have to accept that pledge. Only then MTF position will get created. If you do not pledge, this MTF position will get created into a CNC position and you will have to pay for the entire 3 lakhs in full. Let me take you through the features of MTF. Few things that you have to know about MTF is, when you buy a position under MTF, you can hold this position technically till the time you maintain your margin. You can hold it for 1 month, you can hold it for 3 months, 6 months, and probably you can hold it for more than a year as well. So long as you are maintaining the margin, you can hold an MTF position. At Kotak, we allow close to 1150 stocks. Rather, the exact number is 1184. As we speak, we allow 1184 stocks and ETFs which clients can buy under MTF. How does this 1x leverage work? The 1x leverage is, suppose you have a stock of A scrip and you want to buy B scrip, you can give 1 lakh rupees of A stock to buy 1 lakh rupees of another stock. This is called 1x leverage. Mutual funds are not allowed as margin when you buy an MTF position. The next thing is rate of interest. At Kotak, we have a product called Trade Free Pro. In Trade Free Pro, we allow a rate of interest of 9.75. Also, this rate of interest is monthly compounded. It is not daily compounded. There are a lot of brokers who compound interest rate daily. We compound it monthly. Between daily and monthly, there are some small pennies to be saved. Few other things. We allow research. Specific research ideas. So when you go on the Kotak Neo app, you have a research section where we give specific research for MTF. At any point of time, if you have excess money, same coming back to the example of 1 lakh versus 3 lakhs of stock bought, suppose you have 2 lakh rupees of extra money available, you can appropriate these extra fund towards the MTF position and you can free your stocks. You can thereafter, the broker will release your pledge and this 3 lakhs of stock will become your own stock. If you have got cash lying in your normal ledger, while the MTF ledger is of 2 lakh rupees, don't think that you will be charged interest net of this. You will always be charged interest on the MTF balance. So it is always wise to appropriate any cash balance lying with you towards this 2 lakh rupees of balance lying in your MTF ledger. So make sure that you do that. We have a lot of FAQs available on our website. You can go through those FAQs as well if you have any questions, and you can again approach our customer service for any questions that you may have on MTF. So that was all about MTF. Thank you very much. And before I end, don't forget to subscribe to Kotak Securities channel. We have recently done a video on collateral. My colleague Indo had just done a video on collateral, which has been liked by many of you all. This is a video on MTF, and stay assured we will continue to do many more videos which will help you demystify a lot of these terminologies in stock market. Thank you very much.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.